House prices annually, yes, all of them are saying higher, but it's pretty much getting to the stage where it's not higher when you look at inflation. When you put inflation into account against these numbers, I rather suspect that we're going to see next month and the month after where we might see some red arrows going back down again. That's my view. It'd be interesting to see what you have to think. So please do drop your comments in the boxes below. Until next time, see you again soon. So let's think about the Office of National Statistics. What did they say? And you have to figure this because they're always out of date. They're always 2 months behind. But it says here that inflation was 3.9% plus in May 2025. And that is really looking for where we're going into the future. So here we can see there's a little uptick now in terms of house prices going yet up again. This is not just about house prices going up, this is the velocity of house prices going up as well. So it's 3.9%. Last month it was less than 3.9%. So what they're saying is that the increase from year on year is higher than it was last month. And just to give us some final points, average UK house prices increased by 3.9% to £269,000 in the 12 months to May 2025. This annual growth rate is up by from 3.6, get my teeth in, from the 12 months to April 2025. So you can see straight away that house prices have indeed gone up even more than the previous month. Average house prices increased to £290,000, 3.4% in England, 5.1% in Wales, 6.4% in Scotland, which just goes to show you that England is not really increasing compared to Wales or indeed Scotland. If you're investing in any of those locations, Wales or Scotland, please drop a note in the comments to say if you agree with these numbers or if you disagree. Indeed, if you're from England and you're saying 3.4%, it's a joke, we're seeing house prices go down from the estate agents, then again, please do comment in the boxes below. So let's take a look at what Nationwide said. And again, albeit we're reporting in August, they're still a bit behind on the reports, but nevertheless, we can see that the monthly index is showing that there's a positive here from an annual perspective. But do note that the monthly change is down 0.8% from the previous month. So if you look at the house price average, it's saying here in May 2025, 273,000 versus 271,000 in June. So they are saying that house prices have gone down between the months. Annual prices is 2.1%, which is lower than what the Office of National Statistics said. But again, the ONS is even further out of date. Just picking up on some of the comments here, it says here, UK house price growth slowed to 2.1% in June, again from 3.5% in May. Prices declined by 0.8% month on month after taking account of seasonal effects. The softening in price growth may reflect weaker demand following the increase in stamp duty. Now, if you remember, stamp duty increased from the band of £125,000. It used to be 0% all the way up to £250,000, but then the HMRC got rid of that, and the 0% band now is up to £125,000 in effect. So would that have a major impact? Well, it could be a £2,000 effect, really, in terms of the change. So maybe. The softening in house prices reflect weaker demand following house price stamp duty land tax. Nevertheless, we still expect activity to pick up as this summer progresses, despite ongoing economic uncertainties in the global economy. I would go further to say it's not global, it's actually UK. If you look at the way that people feel about the UK economy, they're not confident in the Labour Party driving forward. So potentially, it's not a global, it could be just a UK issue right now. They continue to say, since underlying conditions for potential home buyers in the UK remain supportive, the unemployment remains low. Depends what happens. We're seeing a lot of taxes on employers. I'm not going to agree on this point that that's going to continue. I do see that we're going to see unemployment go up. Earnings are rising at a healthy pace in real terms. After accounting for inflation, household balance sheets are strong, borrowing costs are likely to be moderate, a little if a bank rate is lowered. further in the coming quarters, as we and most other analysts expect. Now, this Bank of England rate going down, maybe it doesn't matter what the Bank of England does, because we are seeing that mortgage companies are lowering their mortgage interest rates, or they're increasing their ability to borrow even more rather than just a 75% rate for buy-to-let owners. It could be even more in the future. Halifax, again, average house price 296,665. Annual change 2.5% higher. Again, we're looking at between 2%, 3%, depending on the previous reports that we looked at. Monthly change 0%. So they're not seeing much change. And again, they're working on their data set, not the global data set. But we can look at, again, some more reports. Pause this if you want to look at more. But I just want to pick up this one. It says, the market resilient continues to stand out. After a brief slowdown following the spring stamp duty changes, again reflecting on that point, mortgage approvals, property transactions have both picked up with buyers returning to the market. So if there's high demand, if there's great supply, which outstrips that demand, then we're still going to see suffering. But if the supply is slowing down and demand's picking up slightly, then this could be a sign of house prices going up even more. But we do not know the future, of course, unless you do, and comments in the box if you do. Lottery numbers would be great if you could just send that as a private message. That's being helped by a few key factors. Wages are still rising. Again, they're picking up, in my view, old data. I think new data will show that wages will not rise as quickly as inflation, or indeed with real wages due to unemployment. Which is easing some of the pressures, and affordability and interest rates have stabilized in recent months. Again, please do note that we're not sure what mortgage companies will do compared to the Bank of England. Just because the Bank of England changes the rate doesn't mean that lenders will do the same. In fact, lenders may even decrease it even further. Pause this if you want to read more about this report. I'm going to move on. Rightmove said a large monthly price fall of July of 1.2%. So they're looking at monthly change again of 1.2%. They're even saying that house prices year on year is pretty much static now, increasing by 0.1%, pretty much nothing. However, they did say sales agreed now 5% higher than last year. So again, looking at high demand, helping competitive pricing. You know, this could be an interesting sign to see what happens with the future, especially in the summer months that we're going to go into just before September. We should see another report published maybe in another month's time to reflect, has that happened? Has the summer sizzle really stimulated house prices? I'm not quite sure we will see that. Yeah, I'm totally honest with you. Zoopla said our prices in the last 3 months. The average house price in the UK is 268,400 as of May 2025, again slightly out. June 2025, this is a rise of 1.4% over the past year. So again, a house price is higher than last year, but they're saying 1.4%. If you remember previous reports, it's been 3%, 2%. They're saying even less, just like Rightmove did, where Rightmove was saying actually it's pretty much the same. Which is amazing when you think about house prices have not moved up at all.